Hey there, Darren Garman here, and welcome to this episode of the Heartland Multifamily Show, the place for all things multifamily. And this episode, we're going to tackle right now probably the item that gets the most press, the most media, the most attention, and is probably talked about more than anything, and that's interest rates. Interest rates. We're going to dive into why interest rates don't matter. That's right. I said why interest rates don't matter, especially when it comes to multifamily. Stay tuned. We're going to jump right into it here soon. Welcome to the Heartland Multifamily Show, the shorter, more profitable path to multifamily ownership and investing. All right, welcome to this episode. You're probably wondering, Darren, what are you talking about? Interest rates don't matter. Now, before I get into the content and reasons why they're not really going to matter to you when you're buying multifamily, do me a favor. Number one, if you like what I'm talking about during this episode, what I'm talking about to you resonates with you, make sure you click that subscribe button below. We'd love to have you join us and be one of our subscribers here at the Heartland Multifamily Show. That's number one. Number two are comments. Especially when it comes to interest rates, I'd love to hear your comments. Please share your comments below, and I would be happy to respond to those, get your feedback, hear and see what you have to say about this episode, and get back to you. Okay, so interest rates. Man, you can't go anywhere right now without the subject of interest rates coming up, can you? Now, here's the interesting thing. I was just at a multifamily conference, I guess I would call it, with people like me, that focus pretty much on multifamily. This is what we do day in and day out. I was recently, just a couple weeks ago, at this conference, and almost every speaker, everyone that got up and talked about what's going on in their respective markets, of course, what comes up? Interest rates. Everybody wants to talk about interest rates. Here's what I did. So I suggested to everybody in the room, I said, I'm going to pass a jar around. We're each going to put $100 in the jar, and we're going to go ahead and write down what we think the highest interest rate will be. In other words, we each get to choose what, in our minds, we think the highest the interest rates will go. We write that down, and then whomever gets it or gets closest gets all the money in the jar. I mean, I thought it was kind of fun, and not many people wanted to take me up on it. Why? Because, oh my God, interest rates, it's stressful. I'm here to tell you, as a buyer and investor in multifamily, interest rates have nothing to do with you buying any multifamily at all. I'm going to say that again. As a buyer of multifamily, as an investor in multifamily, interest rates have nothing to do with how well you will do and how well a property does. Okay? Now, you're probably wondering, Darren, what the hell are you talking about here? Of course, interest rates have they have nothing to do with how well you will do. I'm going to explain to you as a buyer and as an investor and why, especially right now as rates continue to go up, you should not be putting the brakes on. You should not be tapping the brakes here in terms of looking for and investing in and owning either your first multifamily property or your next one. And by the way, this is if you're active or passive. Okay, you should not be putting the brakes on because it would be a mistake if you did. If you're thinking, man, interest rates, I'm going to wait to buy till rates go down. Wrong decision. I'm going to wait to invest and look into multifamily to own when rates go down. Wrong decision. I'm going to invest actively or passively in my next deal when rates go down. Wrong decision. I'm going to tell you the three reasons why. Let's go ahead and let's start out with reason number one. Reason number one is interest rates have nothing to do with the demand that residents will have to rent the apartments that you're going to purchase. Interest rates have nothing to do with it. In other words, there's always going to be demand from residents looking to rent apartment communities. Okay? Whether interest rates are 30% or 3%, there will always be demand from people looking for, wanting to rent. You know, in one of my books, Renter Nation, I went ahead and I talked about that. I talked specifically about our country being a renter nation now. You remember the American dream? You remember that? And look, for many, it's still out there. It's still possible. And people still go for it, which is great. I love it. However, the American dream, which is to own your own home, it can be a single family home, condominium. It's pretty much the American wish anymore. Okay? And it will continue to become the American wish even more and more. Now, am I saying that people will stop buying homes to live in? No. Am I saying they're going to stop buying condos? No, of course not. People are going to continue to buy homes to live in and owner occupied. No doubt about it. All right. However, each and every year that percentage goes lower and lower and lower. Why? Just because for many, for hundreds of millions of people, it makes sense to rent, to continue to rent, and to want to rent. No matter what interest rates are doing. Interest rates have no bearing on that. Okay, so when you're buying a multifamily property, you're looking at buying one, you don't have to worry about what the rates are because the demand is there and it's going to continue to be there. Okay, so that's number one. That's reason number one. The demand will continue to be there no matter what interest rates are doing. Number two, the second reason is you're going to be basing your purchase price on the financing you're going to get anyway. Look, you're going to base what you're willing to pay for a multifamily property, again, whether you're an active or passive investor, based on the financing that you can obtain at the time. That's going to be part of your equation. Okay? And again, whether interest rates are 3% or whether they're 30%, depending on what kind of financing you get, is going to dictate in large part the price you're willing to pay, and that's the price you should pay for the property, period. Okay? It doesn't matter where the rates are because your price point's probably going to move somewhat either up or down based on where interest rates are at. All right, we're going to take a quick break. I hope you're enjoying this episode. I'm going to be having a free webinar coming up, the link's below, on how to correctly and with low risk invest your IRA or 401k in really good multifamily properties. A majority of our investors do this. I do this personally. It's not illegal. Make sure you click the link below. We'd love to have you. Now, please understand, I'm saying it depends on where your price point's going to be, not whether you should buy it or not. Of course not. If rates are, say, 15% in the next 5 years, I'm still going out and I'm looking to purchase multifamily. If my borrowing power is at 15%, yeah, I got to factor that in the price that I'm willing to pay. Okay? If it's 3%, yeah, I'm going to factor that in to the price that I'm willing to pay. In other words, look, it doesn't matter what rates are at because whatever the rate is that you're going to be able to obtain to get your financing, you're going to base, at least in some part, what you're willing to pay for that property based on your financing. Of course, why? Because the higher the interest rates are, the higher your loan service or your debt service or loan payments are going to be. And the higher your loan payments are going to be, more than likely, the less you're going to be able to pay for that property. I mean, you don't need a PhD in economics to know that, but as a buyer, as an investor, doesn't matter to you, okay? You're going to pay whatever you can pay in order to hit your target returns and your target income, okay? And your target income, all right? So, doesn't matter what the rates are or where the rates are at because you're going to base your purchase price on those rates. You're not going to stop purchasing. That doesn't mean, oh, rates are high, I'm going to stop purchasing. No, you just move your purchase price. As rates go up, your purchase price goes down, okay? As rates go down, your purchase price may go up. Fine, but that doesn't mean you absolutely stop just because rates are getting higher. That's not a good reason, and you're missing out. I promise you, you're missing out on opportunities if you have that mindset. Okay? And then there's the third reason, okay, why interest rates don't matter at all. And that is resale. Okay? Resale. So let me ask you a question. Now, I've said this in other episodes. One of the things that I do before I purchase a property is, in my mind, I kind of fast forward at least a minimum of 5 years. I do this mentally, and I think, does this property have good resale 5 years down the road? Is this the kind of multifamily property where there'll be demand from a buyer 3 years, 5 years, another investor 10 years, 15 years from now? Do I realistically think that'll be the case? Looking at the property, looking at what surrounds the property, the area it's in, the neighborhood, the location, do I think that's the case? If the answer is yes, again, there's going to be demand to buy your property whenever you decide to sell it, no matter what the interest rates are. Okay, now, where rates go might affect the pricing. So if you sell when interest rates are really high, you might get a lower price for your property, sure. If you decide to sell your property when interest rates are really low, you might get a higher price for your property, sure. But if the demand is there from an investor like me or like you, that demand is going to stay pretty consistent. It's going to stay pretty consistent. Okay, so high interest rates, as they go up, it doesn't really reduce the demand of people wanting to own an apartment community. Again, what does it have an effect on? The pricing. The pricing. And if you're an investor and you own your own multifamily property, you obviously want to be sensitive to that and strategize to that if and when you decide you may want to sell. But that has nothing to do with being able to sell that property. That makes sense? Okay, so let's cover these 3 reasons why interest rates as a buyer and investor in multifamily have nothing to do with you moving forward, being able to, and locking into a really, really good multifamily deal, especially over the coming year. Okay, number 1 is demand from residents. There's always going to be demand from residents wanting and wishing to rent apartment units no matter where interest rates are at. They're not out there saying, well, interest rates are 15%. I don't think I'm going to rent anymore. That's not going to happen. So that's number 1, demand will continue. Okay. Number 2 is you being able to purchase a property. You're going to be able to purchase a property just as easy if rates are 20% than if they're at 5%. It doesn't matter. The pricing is going to matter. Okay, what your basis is going to be when you go into it, of course, based on where interest rates are at, but being able to purchase, no. I hear from way too many investors, I don't think I should be purchasing any multifamily right now. Rates are too high. This is like the best time to do it because in most cases you can get lower pricing if you do so. Okay, so that's number 2. And then number 3, the demand from investors like you and like me, it's not going to go away with higher interest rates. Investors are still going to be looking at multifamily as an asset class that they should own, they need to own, and in a lot of cases they want to own. They're not going to care where interest rates are at. That doesn't affect whether or not they think they should own it or invest in it. They're still going to want to. Again, it'll impact maybe what their returns will be and how much they would be willing to pay, how much you'd be willing to pay, how much I'd be willing to pay, but it's not going to make a difference. So what are you waiting for? What are you waiting for? You're wasting time if you're sitting on the sidelines, not investing in multifamily either actively or passively because you think interest rates need to be lower. Has nothing to do with it, has everything to do with you moving forward. And I can make the argument that when interest rates are high, you actually get better deals than when they're low. So if anything, you should really be scrambling and looking for a great multifamily property, even when rates are continuing to rise. All right. Hey, I hope that you have enjoyed this episode of the Heartland Multifamily Show, where I've talked about, hey, interest rates don't matter when you're investing, purchasing, and buying multifamily property. I hope what I've shared with you has provided some value. Again, would love to hear your comments below. Would like to get your feedback. And if you like what you've listened to on this episode, hey, become one of our subscribers. Would love to have you. All right, have a great day. We'll talk to you soon. See ya.